Hi everyone, today we got another exciting SPAC on the books, and this is Social Capital V, another Chamath Palihapitiya SPAC, and it is merging with a company called Social Finance. But first the basics. Social Capital is currently trading at $18.74, giving a valuation of $1.8 billion. So the current situation is this company is merging on a post valuation of $8.65 billion. But if you were to buy this SPAC today at this $18.74 price tag, you'd actually be valuing the company at about $16.2 billion, because as we know of these SPACs, they usually start at a $10 base, and then the higher the pricing goes, the more it increases on this initial valuation. So this kind of includes $2.4 billion in cash proceeds, firstly $1.2 billion in from investors and institutions, and then another $800 million from Social Capital V itself. So yeah, you can see that the company's raising so much money, but they need a lot of money because of the industry they're in. If you're a finance company, you need a lot of money because you're lending a lot of money. So in a sense, it makes sense because of that. So in terms of social finance, as it puts, it's a modern take on money, and it's all about placing everything online and then providing a lot of products and really simplifying the process and bringing costs down. And hence why, like, I would say this is like an Amazon of like finance, because it's really coming into an industry that hasn't really been disrupted. Like, you can think of like the whole retail industry, and then how Amazon just came in, taking an online approach and just bringing everyone online. And the same thing with like social finance. It's again going, a lot of banks have like a lot of bricks and mortars, kind of like stores, and you have to go in, you talk to people and this and that, or you do your, you do your management of your kind of bank account in person. But whereas these days, you can actually take it all online, and it actually brings the cost down. It also allows them to give you, all the information up front on, like, say, an app here, which kind of gives a lot more power to the consumer, and hence why they're social finance, because they're all about helping that social good. So yeah, like as they say, the philosophy of this company is to attack debt with a plan, always have a safety net, put your money to work, save for retirement. So that's the thing, like, whereas other kind of institutions kind of really want to make the most money out from you, social finance is there to provide you all the products that you need in the best way for your own financial good. And in a sense, that kind of, by helping you help yourself, it actually helps them as well, because it creates a person with a lot more wealth, and you're going to be using it on their platform to do other things as well. So in terms of their products, firstly, they do student loans. Again, like, they just have this ecosystem where the minute you start off with them, you're probably going to go through your whole life with them in a way, because they've built so many products that you basically would only need to use this company. So in terms of, like, you've got your student loans, if say like you start life as a student, and then eventually it goes into personal loans, where like afterwards you need like personal loans, and then after that you go, oh, I need a home, and you're going to have a home loan, and after that you pay off your home, and then you go like, I'm going to go into investing, and you can do stocks, you can do crypto, you can go ETFs, and yeah, so there's a lot of like kind of, they make it very comprehensive in a way. And then they've also got their credit card, any other programs, as well as like insurance and all that. So as you can see, they cover everything. Like, they've literally got all the products you need on here. Hence why it's like a whole Amazon ecosystem, where it's like, the more the company exists, the longer you stay with them in terms of their products, and the more that products they start to create around you, and they start to personalize this experience to really give you as a consumer all the power. So let's jump into like the financials. Alright, so now we're looking at the revenue, and for 2019 they did 451 million, and for 2020 they were expecting about 621, but that hasn't been confirmed yet. I'm sure they'll release the numbers very, very soon. And for this year, 2021, we're looking at about 980 million that's expected. So you can really see that the growth of this company is immense. And for the year after this, we're looking at $1.5 billion in 2022. So everything about this company is all about growth. It is all about them growing out their products and being really, really comprehensive about what they do. So in terms of their member growth, the really, really amazing thing is as they go on, the growth of their members actually just increases significantly. So we're going from 2019, where they had less than a million, to this year where they're expecting about 3 million. So in the space of 3 years, they're increasing the membership base by almost about 4 times. But obviously, what's really, I guess, amazing is they're looking at about 1.7 million members, and by the end of the year they expect about 3 million. So that growth is what is looking really fantastic. But of course, if we look at the whole system of this company, that this company is not all about just supplying for an average customer base of general consumers. They're also supplying their platform to a whole network of really sophisticated kind of financial companies, which they include like Chime, Robinhood, Remitly, and these companies are big players. So as it's put, Sofi is a primary player in the enterprise banking infrastructure, which kind of comes from the acquisition of Galileo, and that one's going to really, really bring in the bacon for this company as well. So this is a company that's really comprehensive on a consumer front, on an enterprise front, and hence why it builds out so nicely going forward into the future, because their revenues are really well diversified, and also as their customers continue to grow, they also grow along with that, which is the amazing thing about it. Chamath Palihapitiya kind of called this like the AWS side of Amazon, because how incredible AWS is for Amazon. So for this part, which is the Galileo part of their acquisition of, this part is going to be really, really incredible, particularly if you go, you recognize Robinhood. Robinhood is a growing company, and as it grows, it really helps out social finance as well, because they're using their infrastructure, and they make, as they grow, everyone grows, so that's the amazing part about this company. It's so diverse in its revenue base, and it's offering really, really important products. And this is the part I really wanted to allude to, that this company literally built most of its products in the last 24 months. So you can kind of see in 2019 they had Relay, and in 2000 they had Invest, and then they had home loans, and they had in-school loans, credit card, and then they have their rewards scheme system, which they recently launched. This is as they kind of build their products out and they become more comprehensive, it kind of makes this company even more attractive to join, and they're not stopping where they are. Again, they're just this Amazon-like company that is really intent on just building out this whole ecosystem, and literally this company wants to become the giant in this space. They've actually made it known in one of these slides, where they're there's all these companies taking in this kind of all these categories, and they're going the only category that really hasn't really been taken as much is finance, and they're saying they're gonna come in and they're gonna take it by storm, and they're gonna be the biggest player in this industry. So I kind of see that as there's a lot of confidence, but again, they're proving it by the numbers, which is really incredible. So yeah, like again, like this is a company you don't buy just to hold for months. You buy this company to hold for years, and you're gonna be really, really well rewarded, because you kind of imagine when you buy Amazon, um, you didn't just buy Amazon to just hold for a few months. If you did, you would have missed out so many gains in the long term. So, you can kind of just look at Amazon itself and go, if you held on to Amazon for the long term, you would have done so well. And the same thing with social finance. If you hold on to the long run for this company, I think it's something you just go like, buy at least a little bit, put it in the drawer so you don't really ever have to look at it again, and then you just will do well over time. You'll beat the market for sure. And the fact that this company is in the financial industry, and the fact of how comprehensive their products are, the risk isn't as high as you would kind of like perceive it to be for a company in this space. So yeah, like I kind of see like, firstly, this company is just so much ahead of every other company around it, that it's just got such a good advantage to just really start to come in and take on the banks, because as you have a newer generation that just loves to do things on their phones, they don't really think about entering a physical store these days. Like I'm in that middle part of that generation where it's like I can kind of do things online, but I also feel like going into the store. But obviously the next generation after me is thinking about, why do I have to go to a store? It takes so much time. Why don't I just do everything at home? And that's the thing. It's a whole new generation out there in the next, 2-3 generations, and they're really going to love this company. And hence why that's the biggest thing about what's going for this company, that it is leading the future, and it is going to do really, really well. And as it grows larger, it just gets stronger. So again, it's kind of like Amazon. As Amazon grows larger, it gets stronger, and no one else really is able to come in and start to compete, because they're not as comprehensive. They can't compete on costs. They're not as innovative in a sense. And I think that's what Chamath kind of sees in this type of company, that he's going, this is a type of company that is going to succeed over time. And that's kind of the type of companies that he looks for. He's not looking to just come in and make a quick buck. He's coming in for massive, massive returns, and he sees a great future for this company. So let me know what your thoughts are on this company, or if you have any questions, just post below. Until then, good luck investing, everyone.